Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Shreve here with a breakdown of the action in today's session, where we saw the sell-off continue and the major indexes testing some key technical levels, Ken.
Yes, indeed. It was pretty amazing. The S&P 500 almost came back to break even in afternoon trading, but we got this wave of selling that came in during the final half hour of trading. So sort of a rough close for the stock market, but let's take a look at three stocks in the drilling group. I want to take a look at Valaris, ticker VAL. Also PCAR, PCAR, is a maker of trucks, and Interactive Brokers, IBKR.
Sounds like a plan. We will do that. But first, let's take a look at the major indexes. The NASDAQ today finishing down 1.2%. The S&P 500 down 0.7%, and the Dow down about 0.5%. And like you said, intraday, it looked like we were maybe going to start rallying back, but then we rolled over again and closed pretty close to the lows, Ken.
Yeah. So this is what happens. I mean, we have an uptrend that is under pressure. We've got a fairly high distribution day count for both the Nasdaq and the S&P 500. So maybe some strong opens and weak closes could be expected at this point. But it was a tough day for the Nasdaq. It tried to rally back, and then sellers came in late. Looks like it's the first close below the 50-day moving average for the Nasdaq since March, I think.
Yeah. So what does that tell you, Ken?
Tells me that the market's probably ready to take a breather here. We do have a key economic report tomorrow morning, the Consumer Price Index. Obviously, the market's focus is on inflation. Those expecting inflation to calm in July for the CPI index probably going to be disappointed because headline inflation is expected to be up 3.3% versus 3% in June, and then core CPI expected to be 4.8%, right where it was in June. So inflation could be sticky here. We'll have to see, but stocks are definitely under pressure. Even when the Nasdaq was rallying back along with the S&P 500 today, there was still a lot of stocks down sharply, a lot of stocks breaking key support levels. So really seeing leading stocks in the market come under a lot of pressure here.
Let's take a look at the S&P 500 coming down as well, hitting its head around that 21-day line in 4,500. Still a little bit of breathing room between the S&P and the 50-day line, but not too much. Now just about 1%. So it's looking like maybe that is going to be a magnet there. It is touching the 10-week line. Also want to briefly take a look at the Dow right around its 21-day line, and IWM, which tracks the small caps, it's now below its 21-day moving average. So it does seem like this pullback, this digestion is something that could take a while to play out, potentially. Like you said, we do have that inflation report coming out tomorrow that could move the market, but it seems like on balance, stocks are digesting what was a really strong first half. And so it doesn't mean that we're just going to shoot straight back up.
Yeah, that's right. I think we're just kind of in a breathing period here. And, the one reason, the S&P 500 is still holding comfortably above its 50-day moving average is to have a lot of oil and gas stocks that are still outperforming in the market here. We could take a look at XLE. The closed off highs today, but this is you look at the weekly chart here, it's kind of in the early stages of kind of breaking out of a longer consolidation, even a little cut base here. So several up weeks in a row. Oil and gas continues to outperform and probably buoying the S&P 500 here. What we know for sure is that tech stocks have really come under a lot of selling pressure, the big leaders so far this year. And it just tells me that a lot of these names are ready to form new bases. Everybody's been watching NVIDIA, as sort of the last leader here that is trying to hold the 10-week line. It looks like it's a little below it now, but we'll see how it ends the week. It's been a big winner in our leaderboard model portfolio, and I wouldn't call this a decisive break of the 50-day line, but still, the first time it's been below that support level for several months.
And let's take a look at KRE. regional banks. Thoughts here, Ken?
Yeah, still optimistic about the financial sector here. So while we've got a lot of money flowing out of technology stocks, you still have some sectors that are fighting a good fight. So the KRE, the regional banking ETF, still made a really nice stand at its 21-day moving average yesterday. Down 1.5% today, but still holding that support level. So financials could have more left in the tank. We just need to see if the S&P is eventually going to hold the 50-day moving average, and what the Nasdaq is going to do as it tests that key support level.
And next on our list, we want to take a look at ticker VAL. This is Valaris in the oil and gas drilling group. A reversal right around the 21-day line in yesterday's session, and further progress today as it sets up in a handle.
Yeah, and it did kind of weaken late with the broad market close near its session low. I think what's most interesting about the technical look here is that you look at the three times where Valaris declined in above average volume. You see three above average volume price declines. Yeah, actually four, but the most recent three. Look at what the stock did. Closed all the way up near its highs on each of those days. So this is a stock that is subtly, showing signs of support. You may look at those heavy volume declines and think, well, that's not good. The stock's falling in heavy volume, but it was able to rally off lows. You look at the weekly chart; it's down for the week, but really, showing constructive action so far. Several up weeks in a row. A good weekly close taking shape this week, and this is just a good example of a cup with handle base. And it's still possible that these oil and gas stocks could provide some leadership in this market.
Next on our list, PCAR in the heavy duty trucks group, trying to bounce off of its 21-day line, faded a little bit here, Ken. But if you're talking about support, that earnings reaction, some nice support there, and it's trying to tighten up.
Yeah, definitely. And I this one kind of came across my radar because I like the look of the weekly chart. Obviously, the daily showing support at the 21-day line, but this to me looks like a solid, pretty close to a first test of the 10-week moving average here. So, looks to be a fairly low risk entry to me as it holds support here. This is a company with just an outstanding track record of fundamentals. They make small, medium, big trucks, known for Peterbilt, Kenworth brands. So PACCAR is a good looking stock here, and really just kind of looking outside of technology to see where market leadership could come from. This is a stock with healthy fundamentals and technicals. I think it has a pretty good look here.
And lastly, let's take a look at IBKR. This is Interactive Brokers, which looks like it's on the verge of a breakout right around that 90 level. Tried clearing last week, pulled in a little bit, and trying to clear that level again.
Yeah, sort of a volatile reaction to earnings, but the stock quickly found its footing, crossed that 87.09 level, did so and with some good volume spikes, and now it's been kind of pulling back in light volume, holding right at the 10-day moving average, and really just sitting at the top of it's like a 20-week, 21-week consolidation. So just flip over to the weekly chart, and you can see here just one of many financial stocks that are kind of holding near highs yet, hasn't really gotten going out of this consolidation, but a stock showing relative strength outside of the technology sector. So be sure to use IBD growth screens. We're seeing a lot of leading growth stocks that are below key support levels at this point, but seeing some leadership outside of technology that is compelling. We're just dealing with a pretty high distribution day count, especially on the Nasdaq, because we had a higher volume decline yesterday. Volume was heavy. Looks like volume was even heavier today. So likely distribution for the Nasdaq for the second straight session. So institutional selling can kind of halt an uptrend in its tracks, and we're definitely seeing plenty of yellow flags out there. So just proceeding cautiously here, and raising cash and getting out of the market's way.
That makes sense, Ken. Thanks so much. And thanks everyone for tuning in. We will be back with more tomorrow morning on IBD Live, and we hope you join us. Investors.com/IBD Live for all the details there. We'll see you then, and we'll also see you right back here tomorrow at the close.